silver's going to move into a new reality. This selling at 50, I love it. It tells me the idiots are still there. They stick a nickel in front of a freight train, and yeah, they got, quote, overbought situation on a short-term basis, but they don't see the larger context. And it wouldn't shock me that when we finally go through 50, we have a situation where we close one, we're talking futures now, December futures. They're 47 something right now. They were up to just below 50 today. When they go through 50, it wouldn't shock me, and I'm not predicting, I'm just saying this would be justice. You you close one day out at 49, next morning you open $3 higher, limit up or something, because, force majeure, something going on, one of the fundamentals kick into gear, and suddenly you don't give these guys a chance to stop out of their short position. They put on at 50.
Gold has shattered through $4,000 an ounce, and silver briefly spiked above $51 before a sudden drop sent the media screaming crash. But market analyst Michael Oliver says that so-called crash is fake, a manufactured move designed to trick investors right before the real breakout. For decades, silver's been locked in a narrow range between $20 and $50, while gold, copper, and other metals have already broken into new price realities. But according to Oliver, that suppression can't hold any longer. The fundamentals, the technicals, and the monetary system itself are aligning for what he calls a quantum leap in silver, a revaluation that could redefine what this metal is truly worth. He believes the next big move won't be a slow climb, it'll be explosive. The kind of move where silver doesn't fall $1 overnight, but opens $3 to $5 higher, leaving short sellers unable to cover. It's the classic setup, the final shakeout before silver escapes decades of manipulation and shocks the global market.
You nail them to the wall and see if they can get out. And it wouldn't shock me that that's the way it happens. So I love seeing the selling at 50 because it tells me the idiots are still there. Yeah, well, in the futures, we watch the front month contract. Now, I know spot is above the front month contract. And it got to 51 and dropped back under 50 slightly. So it made new highs. Futures did not. They stopped at 49.768, a couple cents below $50. So some guy said, I'm going to sell the nearby future just below 50 and risk a nickel. Okay, make a dime. Okay, well, they're getting a sell-off here. Fine. Okay, I think it's idiot selling. Our assessment technically is that silver is about to make a quantum leap to a new reality. It's not in a bull trend. It's in a total shift phase in its price zone that it's lived in for 50 years. 50 highs, basically 20 is sort of a low, and it just lived there forever. Go to the Federal Reserve of St. Louis, Fred, and you can punch up charts like lead or zinc and go back in price history. And they'll have monthly close-only chart going back to the 1990s anyway. And you'll see that they lived in a zone for quite a few, decade and a half or so, both those base metals. And in 2006, very late that year, silver and gold were already in a bull trend at that point. These metals took off and tripled in value, base metals. And since then, yeah, they've come back down, but they've never come back down into that prior zone of reality. They live in a new zone of reality that is double or more on average for the last 10, 15 years of what it used to be back in the 1990s to 2000. Well, silver's still in that first range, okay, where it was from the 1979, 80 high, the 2011 high. Gold's above the 2011 high, copper's above the 2011 high, and silver's still contained here? Give me a break, okay. We know the fundamentals. I don't try to keep up with them too intimately because that's not what we do. But the technicals argue to us that we're about to blast out of this range and not just have another nice leg up, but move into a price zone of new reality. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months. We're waiting on one trigger. It's a spread relationship between gold and silver. And we run momentum studies of it as well. Now, everybody looks at the ratio, the 80-70 to 1 type thing. We do it a different way. We divide silver to gold, express it as a percent. And right now, silver is about 1.2% of the price of an ounce of gold. That's extremely low going back 50 years. It's been over 2%. In 21 of the past 50 years, silver has reached 2% of the price of gold. And some of those weren't even bull market years. Okay, so we're very submerged, but there is a very clear structure on the spread charts. When you plot the spread chart, silver versus gold, there is a pending triple top breakout at 1.31%. So we're not far below there. When we cross that level, the same thing happened to its spread versus gold in 1979 and in the fall of 2010, just before silver went totally vertical. It went from like 20 something bucks to 50. Boom. All in a handful of months. The spread was the tell. And we're watching that. We think it's going to break through. And our momentum of the spread suggested even a lower level than that 1.31%, which is a prior double top. We'll break out before that. And when we do, when that spread breaks out, I'm putting the seatbelt on. I think silver is the place to be for the next 2 quarters. And the move could be enormous. And you look back and say, oh, now I understand why. Supply demand's been tight, et cetera, et cetera. Market has been at an irrational level for too long compared to other metals, for example, that have done the same thing, had a tantrum and moved to a new reality. Anyway, that's my major comment. Yeah, that reality's been there for a while. We know that. Recent years where the supply demand is the way it is and demand increasing, supply is not, et cetera, et cetera. And yet price hasn't responded in a real way. I mean, you think about dollar terms also. 1980, 50 bucks. In real dollar terms, where would it put us now? It's probably 250, okay? In the decay in the value of the U.S. dollar, not relative to other currencies, but in real buying power. Even over since 2011, money supplies increased like 150%. Okay, has silver increased that much above the 2011 high? No. Okay, so there's all kinds of realities out there that we know exist. We scratch our heads and say, this is ridiculous. Okay, we do anyway. And we know when it changes, it could change in a way that is, well, we've seen it in many markets. We've been around long enough to see when a market gets overvalued for too long, it gets ridiculous. In hindsight, everybody calls it a bubble. Of course, when it was happening, nobody called it a bubble. Or a market gets suppressed for so long that people think, oh, that's a new reality. It's a piece of crap. We don't, who cares about silver anymore?
Michael Oliver is known for being one of the most disciplined technical analysts in the precious metals space. And he's not guessing. His conviction comes from momentum spread analysis, a method that tracks how silver performs relative to gold. Most analysts look at the gold to silver ratio, 70 to 1, 80 to 1, and so on. Oliver flips it. He measures silver as a percentage of gold's price. Today, that figure sits at just 1.2%, one of the most suppressed readings in half a century. Historically, that number has averaged closer to 2%, and in bull markets it's climbed above 3%, even hitting 6% in 1980. His research shows that when this silver-to-gold spread crosses 1.31%, silver historically explodes. It happened in 1979. It happened again in 2010. Both times, silver shot from $20 to $50 within months, not years. Right now, we're sitting just below that trigger. Oliver's words, when this breaks, put your seatbelt on. He believes this breakout will happen in the next 2 quarters, as gold continues its historic surge above $4,000, and central banks quietly stockpile both metals to hedge against fiat instability. The gold market has already moved into a new zone, but silver, still lagging, is the coiled spring. Once released, Oliver expects it to catch up violently, potentially doubling or tripling within months. And the fundamentals agree. Silver is no longer just a monetary metal. It's an industrial backbone for the modern economy. Global solar demand has hit record highs, battery and chip production are surging, and governments worldwide are pouring billions into green infrastructure that requires vast quantities of silver. Yet mine supply is stagnant. At the same time, monetary factors are amplifying the setup. Since 2011, global M2 money supply has risen by more than 150%. Adjusted for that inflation, 1980's $50 silver would equal over $250 today. Yet silver is still below $50. That's not normal, Oliver says. That's a distortion waiting to correct. He points out that every other major metal, from copper to zinc to gold, has already escaped its long-term price range. Only silver remains trapped, despite having the tightest supply chain and most strategic demand profile of all. When that distortion ends, Oliver argues, silver won't just rise, it will overcorrect, launching into a new long-term zone between $100 and $200 an ounce. He calls this the awakening phase, the point where years of suppression, short selling, and false price signals collapse under real market forces. And when that happens, silver won't just catch up to gold, it could outperform it dramatically.
And it suddenly says, I'm going to wake up. Markets make mistakes. Investors make mistakes in terms of allocation, proper pricing in relation to reality. These things happen. Markets aren't always rational. And I'm arguing that silver was irrational, especially for the last 10, 20 years, of not ever coming up above this base range high that virtually every metal in the world has done. And not silver? Oh, okay. What for? And now it's moving with gold now because it's a monetary metal. But when silver engages on the fundamentals, like the graph we just saw, it'll have its own life. And I think it's going to move to a new reality. And again, if you do a dollar conversion, $200 is not irrational whatsoever. And sometimes when markets are too irrational one way, when they correct the other way, they overcorrect. Okay, you go way beyond what the new reality might be in silver. Maybe silver's going to live in $100 to $200 range for the next 10, 20 years. But it might reach 200 and fall back to 150. You'd get my point. And there's a new reality. The technicals are arguing for that, especially the long-term momentum technicals and the spread relationship to gold. Argues that silver, just to go back to its normal reality, let's say 2% of the price of an ounce of gold, which it's been 21 of the last 50 years. You've seen it at that level. In bull markets, silver spread to gold goes above 3%. In 1980, it went to 6.5%, the price of gold. But let's say it just goes to 2%. Well, what's 2% of $4,000 gold? Okay. What if gold goes, and we've been arguing this, and does what it did twice before? It had bull markets in the last 50 years, both of which were 8-fold gains, bear low to bull high, under circumstances that are far less dramatic and earth-shaking than what we have building out there now. If gold did it again a third time, had another 8-fold move, we'd be 8,500. Well, what's 2% of that? Okay, you get my point. Yeah, we're talking about money degradation. Money is gold. Dollars are pieces of paper. Ludwig von Mises said that government the only entity in the world that can make a valuable commodity like paper worthless. We ran a chart in the weekend report, not our technical stuff, just money growth, M2 chart. Went back to 2000, went back 25 years to the year 2000. And money growth has been like 4.5-fold in increase in the money supply, 4.5 times where it was then. S&P has matched that. Matched it. In other words, really not done any better than holding its buying power versus the dollar. Price of beef has matched the growth in the money supply. So a pound of beef frozen is appreciated just as much as owning the S&P since the year 2000. Gold, 16-fold since the year 2000. Okay? So if you're an investor, where's your reality? Okay? 16-fold. Money supply 4.5, S&P 4.5, gold 16-fold. That's what we're talking about.
Michael Oliver's warning is simple and direct. Don't be fooled by the noise or the fake $50 crash narrative. This isn't a top. It's the turning point. The end of the manipulation phase and the beginning of silver's monetary reawakening. When it happens, you won't have time to react. You'll wake up to a new market, one where silver is suddenly repriced and the old rules no longer apply. So the question is, will you be ready, or will you still be waiting for confirmation after it's too late? If you believe in real value, if you understand what's happening with global debt, de-dollarization, and fiat decay, then this is your signal to pay attention. Because when silver finally moves, it doesn't rise quietly. It erupts, violently and without warning. Watch the full Michael Oliver interview, linked below, for his complete technical breakdown of the coming silver breakout. If you found this video valuable, don't forget to like, share, and subscribe for more deep dive analysis on gold, silver, and the new financial order forming right now. Question for you. What do you think silver's new reality will be? $100, $150, or $200 an ounce? Let me know in the comments, because the conversation about silver's future has officially begun. The reset isn't coming, it's already here.